Hi, welcome everyone. I hope everyone can hear me. Welcome to this webinar on the investor expectations of Asian electric utilities by AIGCC on the report which was published earlier this month. I'm Jane Ho, the Investor Initiatives Manager for AIGCC and one of the presenters today. Just a few housekeeping points to highlight. Attendees are in listen-only mode. A recording of the webinar and the slides will be made available and emailed to you. And please feel free to ask questions at any time by using the Q&A function. So please, Jada, onto the agenda. So we will have a quick introduction done by Rebecca McCullough-Wright, the Executive Director of AIGCC, followed by a deep dive into the Investor Expectations Report. My colleague Yong-Liang Paul, the Research Manager for AIGCC, will first give an overview of the current backdrop for Asian utilities, followed by the Investor Expectations, which will be covered by myself. If we have time, we'll do the Q&A, but this may actually be pushed back to the end, post a panel discussion, which will follow. So now I'll pass on to Rebecca to do a quick introduction.
Hi, Jane. Thanks very much for that kind introduction. My name's Rebecca McCullough-Wright. I'm the Executive Director for the Asia Investor Group on Climate Change, and really delighted to have you join us today to go through this report. Just very briefly, for those of you who may not be familiar with AIGCC, we're an initiative to create awareness and encourage action among Asian asset owners and managers about the risks and opportunities associated with climate change and helping them build their capacity to incorporate it into their policies and portfolio. So we now have 50 members made up of asset owners and managers from 11 markets in Asia and internationally, including some government pension funds and sovereign wealth funds. In addition to, we work closely with other key stakeholders in the region, such as policymakers and regulators. Our members represent over 13 trillion in assets under management. And I've just briefly listed there some of the activities that we undertake to help build that capacity on climate change. We've had a number of C-suite roundtables with asset owners in the region in the last few years. We produce research, obviously, such as this report today, and resources for investors. They're developed by investors for investors. And we have some new working groups that have started at the end of this year, and some new ones that'll be starting early in 2021 to give investors more opportunities to get involved with our projects and activities and show their expertise, and so that can come through in the activities that we work on. And we have some of our key projects are listed there. Climate change training, we've just finished a pilot for that just in December, and we'll be rolling that out across the region in 2021, including a focus on low carbon opportunities, also in the new year, and what investors' position are in terms of, and we're doing that by undertaking our second annual survey, and understanding how they think about low carbon in their portfolios and how we can help them to scale up the investment that they make in the transition in this next critical decade. So just moving on to the slide, just to briefly mention that tomorrow we'll be publishing our year in review. So this is the second year we've compiled just a summary of our activities and projects and the impact that we've had in the region throughout the course of this year. Just some key highlights to show here, just about the growth in the team. We have had a significant growth in the team this year. We now have 9 staff in 4 markets, Tokyo, Seoul, Hong Kong and Sydney. And hopefully a lot of you have been able to meet the staff and work with them already throughout the course of the last few months. We've had quite significant increased policy activity in Japan and Korea, particularly this year, that we've been, and our increase in team has been able to, mobilise to address the activity and respond to that, and increase our engagement in those particular markets. Obviously, this year we've seen increasing climate ambition from the region, with a number of net zero commitments, from significant commitments from China, Japan, and Korea, in addition to what we're now seeing as a wave of new commitments from corporates and also some investors in the region. And we certainly expect, more of these announcements to follow in the new year, and we'll be incorporating that into our focus for 2021. I mentioned a couple of our activities but we will also be providing and launching a framework for investor climate action plans, and how investors can incorporate climate into their portfolios in 4 kind of key areas across policy, corporate engagement, the low carbon investment, and how they disclose around their activities that they undertake. But overall, we've had some incredible commitments, which is very exciting this year, but 2021 needs to be about implementation of these commitments. And investors will be engaging with companies to understand how they are, looking to map out their pathway to the government commitments that have been made, and in other cases where their government NDCs are and how those companies will go beyond and are planning to go beyond those nationally determined contributions, as we expect them to ratchet up in line with the goals of the Paris Agreement. So thank you. That's just a quick overview of AIGCC activities. And now we're about to dive into the details of the report. Just to highlight that we now have traditional Chinese, simplified Chinese, Japanese and Korean versions of this report now available on our website, aigcc.net. Obviously, our target audience for this is to ensure that this is a useful tool for investors active in the region, to help them in their engagements with companies, but also we hope for electric utilities companies in the region so they can understand what investors are expecting of them. And we hope, obviously, that we have some quite specific investor expectations that we'll take you through as quite a detailed guide on some of the questions that you may ask in the engagements with boards and management. So with that, I'm delighted to hand over to Yongliang Por, our research manager at AIGCC, to take us into the deep dive. Thanks very much, Yong.
Thank you, Rebecca. Hi, thank you everyone for dialing in. I think as electric utilities in Asia contribute 1/5 of global CO2 emissions. So this is why the sector is so vital. It's really, if you fail to decarbonize the sector, it's almost an impossible task. So I think the good news is that, for a long time, the sector was very intransigent. The sector was still adding lots of coal capacity, but in 2020, there is just no more excuse for that. We know that the renewables cost has been coming down, and you can see from the chart that on the right-hand side, I apologize, the wording is quite small. On the right-hand side of the chart are all the renewables costs, on the left-hand side are all the fossil fuels. And you can see very clearly already that in 2020, it's cheaper to build renewable capacity than fossil fuel. And by 2030 or 40 or 50, the disparity is going to get even larger. And it's just going to continue this way. There's also another interesting development, which is that in Asia, renewables costs are 1/3 cheaper than in developed markets. And this is just a function of, economies of scale, cheaper labor, etc. So there really is no excuse not to use renewable capacity in Asia anymore. Now, the really important thing as a next step for the sector is how do you deal with the intermittency problem? And that's a question that comes up very often. And we see the immediate solution to be coming from battery costs, which are coming down very rapidly, also down 90% in the past decade. And it's going to fall in further 60% in the next 20 years. So that's going to be the near-term solution. And in the longer term, we are going to need more long-term duration solutions to be commercialized. Some of those include hydrogen. So that's very early days yet, but we think that we'll see solutions to that by the end of this decade. So technology is the key driver behind the rise of renewables, and I'm sure we're all very familiar with that. And I think that based on what we've seen in the last few years, this trend is going to accelerate, and it's going to deliver even quicker cost downs than we anticipate. Next, please. Okay. Now, the thing about energy policy is that as well, for a long time, it was very difficult to get past the fact that most utilities in Asia were, nationally run companies. So they were just having to do the government's bidding. But now the energy policies in Asia are changing so rapidly, and it's all moving in the right direction now. So that's why this is really the pivotal year. I think that in the next few months, particularly, you'll see many new announcements coming up from the government, and the utilities will clearly have to toe the line. And so I think this has started off a chain reaction of new policy developments that are going to take place. And I'll just highlight to you that just today, South Korea has announced that by 2034, they'll plan to generate 42% of power from renewable sources. That's up from 6.5% in 2019. So that is remarkable, and that is a real statement of intent. So in this report, we realized that Asia is such a broad, diverse geography that we've put together a lot of the useful references. For example, NDC targets, renewable energy targets, energy efficiency plans, carbon emission trading programs, disclosures. We've put together tables, data on what each country in Asia is doing with regard to those topics. And I think that will be very useful in dealing with the companies when we engage with them. Just bearing in mind that this is going to be moving at a very quick pace. Next page, please. Okay, so I think that this is where we are going, where actually on the ground developments are moving very quickly. For example, we know that Asia is the manufacturing center of the world, and all the major supply chains run through Asia. And we are hearing that many companies now, because let's say Apple or Microsoft, they've all committed to net zero. So many companies now in Asia, they're actually finding it hard to source the green electricity that they need to fulfill these obligations. So case in point, I think TSMC in Taiwan is under, needs to fulfill this renewable energy program, but there just simply isn't this availability in Taiwan. So I think that's a really interesting phenomenon, something, that there is actually more demand than supply of green power in certain cases. So I think that we are going to see more and more of these direct purchase power agreements. I think LG Chem recently, they committed to buying direct renewable power for their China factories. So more and more that the demand is going to propel and require green power. And so more and more solutions are going to have to be able to come up now because of that. Now, I think the one thing about the utility sector is that, it's not that actually all this net zero and all this renewable development is actually going to be very positive for the long-term demand growth. Because we are moving from a molecule to an electron-based economy, the demand for electricity is actually going to increase very significantly as it replaces oil and coal. So this is a sector which I think has good growth prospects. The electric utilities themselves should be genuinely very excited about this opportunity. And hence, I think, it's going to be wonderful to, it's going to be constructive to engage with them, simply because it is going to have a positive outcome for everyone at the end of it. Next page, please. Okay, so I think that the financial community, which is us, I think we're finally moving in the right direction with this. And actually a lot of developments have been happening in the last 12, 18 months to reflect that the high carbon emitters are seeing deteriorating economics. So financial institutions all over the world are starting to put restrictions on coal financing. In the report, we have outlined 123 global institutions. And in Asia, at the last count, it's about 20. And so we see that overall, fossil fuel lending is being squeezed by all these restrictions. But on the other hand, for renewables, it's become very bountiful. So in the first half of this year, I think it's interesting that China led the world in issuing green loans. I think it was about, the number was $1.7 trillion. This is the largest green loan book issued in the world. So we know that things are moving very, very quickly in Asia. It's very, very positive. We think this trend is clearly going to continue. The hurdle rates for investing in new fossil fuel projects today are northwards of 20 to 30%. And for renewable projects, it's going to be coming in somewhere in the region of about 8 to 9%. So it's going to be much easier to finance these renewable projects. And so one by one, you can see all the barriers to renewable investing is coming down. And so we expect this trend to accelerate further. Next page, please. Okay, so how do we get there? And I think there are several pathways that we can rely on. So the first one is the TPI, Transition Pathway Initiatives. And in this case, they require, the recommendation is that utilities need to basically go to zero by 2050. There's no two ways about that. SBTI, under this procedure, global utilities need to cut intensity by 76% by 2030. In the NGFS scenario, under the orderly scenario, which is basically a 1.5 degree scenario, a complete phase out of coal is required by 2040. So the report goes through these three scenarios, and I think that it contains useful references. If you want to, all the links to the reports, if you want to go deeper dive into them, get a deeper understanding of the methodologies involved, it's all presented in the report. Next, please. Okay, so I think, very commonly asked question is, what are some good examples of Asian utilities who have progressed well on climate change? And we came across these two examples. The first one is a CLP. And if you look at the emissions reduction plan, it's very, very clear. They have this very clear roadmap towards lowering carbon intensity by 80%. And it's very clear. You can see from precisely where the reductions are going to come from, whether it's going to come from a coal plant closure, it's going to come from a shift to natural gas. So it's all very clearly set out. They have committed to a renewable capacity target, phasing out of coal power assets, and they've committed to reviewing targets every 5 years. So I'd encourage you to have a look at that report if you haven't already done so. And of course, that is a more advanced example that we have AC Energy in Philippines. This is a pretty small power company by North Asia standards, but I think it's very good example because this company, it came out and committed to full divestment of coal-fired plants. It came out with a renewable capacity target. So I think it shows that even in ASEAN, even in Philippines, which is not a country which can bear very high electricity costs, all these things are still doable, and there really should be no excuse. So we'll move on to the first poll. And Jayata, could you run it? Okay, so I think the question is, what was the average utilization rate for China's coal-fired power plants in 2019? And I think this is really useful to give an indication of where we stand today, and just to, really emphasize the point. And I'll give you guys about another 5 seconds. Take a stab at it. Okay, all good. Jayata, could you run it, please? Well, okay. So I think you guys are too optimistic. The real number in China in 2019 was 48%. So we all know, as analysts, that anything below 50%, it's really troublesome. The raw numbers are that it's 48% today. It's down 10 percentage points from 10 years ago. And how it works is that the IRR from 10 years ago was in the high single digit rate, almost 10%. And today at 48%, it's going to be in the mid single digit range. So it's really quite unconscionable as an investor to keep on building coal plants. And I'll stop here and hand over to Jane.
Thank you, Yong. Next slide, please, Jayada. So bringing it all together, what does that mean for investors? For all the reasons stated, utilities clearly have a key role to play in climate change, and vice versa, climate change is clearly a material issue for utilities companies, even to the extent of viability over the long term. As investors, in order to make informed investment decisions in the sector, we need better information and disclosure. Investors want to invest in utilities with credible long-term decarbonization strategy, because there's a major reallocation of capital happening, which has significant implications for cost of capital. So companies with sustainable strategies will have higher valuation and a lower cost of capital. We want portfolio companies to be successful and to work with them to enable that through constructive conversation. The interests are aligned, and it is in companies and their board's interest today to not be a laggard in this field with the increasing ESG products and demand for companies that are seen to be leaders. So we've stated here 5 key investor expectations for Asian electric utilities: governance, decarbonization strategy, transparency and disclosure, physical resilience, and public policy. And these have been formatted in a series of questions to make the guide more practical. But I also want to highlight that, in fact, some of these areas are also relevant for companies in other sectors, particularly around governance and risk management, where there isn't necessarily a materiality threshold, and they can be used as reference as such. Next slide, please, Jayada. So how can I use this report? Under each of the 5 investor expectations, there is a summary expectation stated upfront to give background to the questions that follow. And there are quite a large number of questions, 50 plus here, around 5 key topics. So I like to think of it as a reference library. As we know, each company is unique and will have specific issues and nuances around those issues. So please use the questions that were presented here as reference and cherry pick those that are most useful and relevant. Another reason for the large number of questions is that we have asked about specific topics in step to allow for companies' position on different stages of decarbonization. So for example, I've listed here, are targets aligned to NDCs, beyond NDCs, aligned to a 2-degree scenario, or aligned to a well below 2-degree scenario? Engagement is an ongoing process and conversation. So having these questions in step also allow for progress and continued discussions with the company. We also recognize that there are still different standards out there in terms of disclosure. So we have the questions aligned to TCFD and acknowledge SASB as a recognized international framework on disclosures. We've also referenced our questions against Climate Action 100 plus net zero company benchmarks, which will be coming out in 2021. And last but not least, there are a large number of SOEs in this region, and we recognize that they operate differently to private companies. And we would like to understand how they work with the state on climate issues and their decision-making processes. And we want to work with them on their decarbonization journey and try to influence and work together with them on best practice. So now moving on to each of the investor expectations. Firstly, governance. The overarching expectation for us is for companies to clearly define board and management governance processes to ensure adequate oversight of climate-related risks and opportunities. Clearly, we know that this process starts at the top. We've seen that with many companies and organizations around the world, whether it's BlackRock or the UN. We need to get the acknowledgement and structure in place first. In Asia, this is particularly important as access to the board of directors are still limited at times. So the 4 areas that we've divided the questions into. Firstly, mission statement. We ask utilities companies if they have a GHG emissions reduction statement. And if so, is this aligned with NDCs, well below 2-degree scenario, or do they in fact have a net zero emissions ambition statement? Again, having these different steps in the questions help both sides to keep track of the engagement process, but also for the companies to see the direction of travel, both in Asia and globally, and as well as investors' expectations. So the second area is oversight. Here we're, Jayada was still on. Yeah, oversight. We're still trying to understand internal processes that a utility company has with respect to climate change. ranging from board level oversight to management to audit committee and other staff members. And thirdly, expertise. We want to ensure that company has access to this from a climate change perspective, from the top level down, and that the company continues to support and maintain these capabilities. And lastly, remuneration, to ensure alignment of incentives for executives with companies' stated goals on climate. So now moving on to expectation 2, decarbonisation strategy, which is actually the largest section out of the 5. So our expectation is for utilities to take action to reduce GHG emissions and also to do so with a clear transition strategy over short, medium, and long-term time horizons. This is particularly important for Asian utilities, as many don't articulate their overall transition strategy and targets, focusing instead on individual projects and case studies. And I just wanted to highlight with regards to time horizon, we've used for reference Climate Action 100 plus net zero company benchmarks, which define the short, medium, and long term as periods 2020 to 25, 2026 to 2035, and 2036 to 2050. So with net zero dialogue internationally moving from not if but how, there is, as Rebecca mentioned earlier, an increased focus on the pathways and what takes place in the next 10 years and what are the short and medium targets for companies. And this is also why the pathways Yong mentioned previously are important. So quickly going over the areas where we have structured the questions. Firstly, strategy, looking for an overarching decarbonisation strategy, as I mentioned, and then diving down into the details of what risks and opportunities have been identified. And there are further questions regarding green revenues commitment and just transition, which is making sure that the transition is sustainable and inclusive. Secondly, generation. How the generation mix is expected to change. What are the assumptions behind these forecasts, given the complexity involving various technologies and policies? Does the company have renewable targets? Thirdly, management and phase-out of coal-fired power plants. Is there a commitment to phase out both domestically and overseas, and how are these reflected on financial statements? And next one, CapEx, which I think is a very important issue given that it determines future decisions. How does the company decide on CapEx, and is it in line with companies' GHG reduction targets? And we're highlighting here as well the risk of stranded assets as well as transition risks. Next, we also have targets. Have these been set over different time horizons? How is performance tracked against these? And are targets aligned with NDCs, or are they more ambitious? And then last but not least, scenarios. So as per TCFD, complexity and forward-looking nature of the climate change means that scenario analysis is recommended to disclose where companies' risks and opportunities lie. The questions then go on to ask how complex and quantitative these are, if any are carried out. So next, moving swiftly onto the closely related area of transparency and disclosure, which is clearly an increasing ask of investors to be provided with much needed information to make informed investment decisions. It's also, as we know, an increasing area of focus for regulatory authorities, both within and outside the region. While there's no one standard at the moment, we are getting there, and TCFD and SASB have emerged as key international frameworks that companies should look into implementing. Our expectation here is for the company to provide enhanced corporate disclosure in line with the recommendation of these international frameworks. We expect companies to align to these frameworks to enable some level of comparability between companies. In fact, it also helps the companies. By filling in, for example, the CDP survey used by multiple stakeholders, this will make their jobs easier. And TCFD, for example, builds capacity for companies to understand what climate scenarios could look like and gets companies to start thinking about this. I'm not sure if this is a surprising fact, but globally, the energy sector has the highest average level of disclosure at 40% for the 11 TCFD recommended disclosures. So this may go to show how useful it actually is for companies themselves. Moving next on to physical risks and resilience. Our expectation is that physical risks are to be taken into account in business planning, with suitable adaptation strategies considered and deployed where relevant. So Asia is particularly at risk given coastal areas and water scarcity, reflecting the density of population and our industrial production. And this is increasingly coming to the forefront, and that's why we also have a focus here on water security risk. We expect companies to disclose their locations and assess which of these may suffer from physical risk, both acute and chronic related weather events, as well as climate hazards such as rising sea levels and flooding, and what contingency plans companies may have in place. Lastly, our fifth expectation is around public policy. Jayada, we can. So we expect companies to engage with stakeholders in support of climate-friendly policies and for the company's actions to be in line with their stated company targets, mission statement, and Paris Agreement scenarios. Regarding policy position, I may reference the first sample question here on the slide, for example. Does the company have a clear commitment and set of disclosures clarifying its intent to support climate policy in line with the Paris Agreement? And secondly, on activity, are electric utilities, do they have board level oversight and transparency of their positions regarding relevant environmental legislation and of any lobbying activities where this is relevant to ensure that activities are consistent with targets and publicly stated policies? So I think we've prepared a couple of frequently asked questions, but in the interest of time, this will be sent to you after the webinar, and please do email us if you have questions. Further questions, but I'll just move on to the second poll, Jayada, if we can. So we'll just do the second poll and before passing on to Rebecca onto the panel discussion. So actually this was mentioned earlier in the webinar, so let's see if you were paying attention. But how much do Asian utilities need to cut emissions intensity by to reach the SBTi 1.5 degrees 2030 target? Jayada, maybe we can run the result in the interest of time. Right, close. It is actually 76%. So the last answer, 80%, is the closest to that. And that is in line with the global utility sector. So that's a lot to do between now and 2030. So with that, I'll pass it on to Rebecca to introduce our panel for today's discussion.
Thanks so much, Jane and Yong, for that really insightful summary overview. I definitely recommend you go into the report and read it in full. It's quite fascinating, and that summary of the investor expectations. So I'd like to invite the other panelists to put their cameras on, and just while I introduce them. Hi everyone. So I'll just do a quick introduction. So we have Sophia Cheng, who just waved to us, who's the chair of AIGCC and the Chief Investment Officer for Cathay Financial Holdings. Thanks for joining us today, Sophia. It's a pleasure to have you on as always. We have Seiji Kawazoe, who's the Senior Stewardship Officer from Sumitomo Mitsui Trust Asset Management, and who is also a steering committee member representing Asia for Climate Action 100+.
Thank you for having me.
Thanks, Seiji. Nice to see you. And we have Paul Milon, ESG specialist from Asia Pacific for BNP Paribas Asset Management. And Paul is also the co-chair of the AIGCC Engagement and Policy Working Group. So thank you, Paul and Seiji and Sophia, all for joining us today. So we'll just run through a few initial questions with the panelists that we have today. And then we'll hopefully there should be some time for Q&A from the audience, but please send your questions in through the chat function and we'll have a look at those as they come through. So I'll just start with my first question to Kawazoe-san.
Yes.
So as a member of the steering committee for Climate Action 100+, and you've been involved with engagement with KEPCO as well through the initiative. It'd be great if you could talk about your experience there and what are some of the key barriers, for example, that you perhaps came across in that engagement and some of the learning points from that process. It'd be great to hear about that. Thanks, Seiji.
Yes, yes. But I think one of the important aspects within these regions, most of the utility companies are held by the states. I mean, it's SOEs, so it is being driven by the country's energy policies or the NDCs. So I think that is undeniable fact. And so although you'll be able to communicate with the senior management about the importance of reporting, such as TCFD, and also and in those questions or in those requests, I think that those companies that do respond to those requests in terms of their thoughts on this climate change, but actual implementation of the climate change commitments really has to come from the more top-down type of policies. And so I think what I've seen over the last couple of months from China, Japan, and South Korea it has been a very significant, kind of incentive for those companies to be aligned with those policies. And I think one of the sort of the questions going forward for them would be how much the utilities are able to align itself to the country's policies, and also the more sort of interregional sort of investments, such as investment into say other Asian countries or other parts of the world for the coal power generations, for example. So I think those are the areas that I think each utility company should are able to align themselves against the national policies again. So I think you have to question that through utility companies, but also in those cases, I think we need to engage with the financiers of those projects overseas, such as banks or financial institutions or trading houses. So thank you.
Thanks very much, Koizoe-san. And I think that's a really, really important point to note, and something that's certainly common across the region is that, engagement with the company often needs to go wider and to go sort of up and down the finance chain to engage other actors. It's not just necessarily engaging with the company directly. So we also look at that with our Asian advisory group, who looks at kind of market level and engagement with other key stakeholders that we may also need to undertake with investors. So Sophia, I'll come to you if I may. And you have obviously in your home market of Taiwan, and obviously plenty of engagement experience that you have. I wonder which of the expectations that we've outlined in the report do you think might be more challenging, and why for some companies and investors in the.
Okay, can you hear me? Okay. When I look at things, I look at this document, it's perfect because it shows the comparison among different countries, what is the progress, and they show you that the renewable energy cost is a lot more affordable than before. So if I can think of any challenge, to me, that would be willingness. All the stakeholders, are they willing to do it? And today with Japan, Korea, China has already committed to net zero in 2050 or 2060. This will give pressure to other Asian countries. And you can see that there is a natural peer pressure among corporates, among governments. So to me, the challenge will be on how do they get there. I don't really worry too much about whether a country cares today. I do think toward end of next year, we should be seeing more countries which either commit or have very serious discussion on net zero. And then for Taiwan as an example, because the government very skillfully allocate the electricity responsibility to corporate rather than to the energy sector. So if you look at the greenhouse gas reduction campaign, the projection, actually manufacturing industry accounts for 52% of the emission, where energy sector is only 13%. So the government is making a different definition from the world. They push the energy, whoever uses it should be responsible for that. So this will create a pressure that corporate will be asking for more renewable energy, where Taipower, the monopoly company with the same, is government owned. Taipower will be receive this pressure from government and from the public that they need to work on transition. So this, I think, with the government now start to discuss potential path to net zero, this should not be too far away to hear these companies discussing this. So what I can do is So try to talk to as many stakeholders as possible, because they always think that they don't believe. They think it's 2050 is too far away. They think the current renewable energy is just not enough to reach that. Everybody just throw a lot of questions, problem to me. But we can think about possible global good cases. We can bring the samples to them. We can share with them this is a solution by what government or what country or what company. They need good samples and they can follow. And they tend to blame others because government doesn't have a clear regulation, because my competitor doesn't do it. So if we can if we engage major stakeholder, we link them together, and we try to engage government first, then government will push pressure to the government-owned entity. So the path is very clear. Without engaging government, combined with engagement with corporate, I don't think this will work. Yeah, and lastly, because Taiwan, Korea, Japan, all the same, we highly depend on energy import. So temporarily, they do take natural gas as a kind of transition solution, because you can have renewable ready over time. But you can clearly see there's a stronger and stronger demand for renewable energy, from complaining about that to complaining that it's not fast enough. So I can see if 1 year later we review the progress, we should be seeing quite much better speed than before.
Thank you so much, Sophia. And I think you've certainly shared with us today, but also in an ongoing fashion with the climate action your signatories, about your engagements and how you approach this, in certain markets and with different companies in different sectors. And I think you've really been able to give us some fantastic insight into the real partnership that is being built between investors and companies, and that it does need to be done in perhaps a different way, with understanding the local market language and culture of these companies, and that we may need to have a different approach than perhaps in some other markets. Which brings me to Paul, with BNP Paribas Asset Management, with that international perspective. I'm keen to get your insight into your engagements with utilities. I think I can't hear you, Paul. Do you want to just try again? I can't hear you. It's just.
Is it good?
Yes, there you go. Great.
Okay,
great.
cool.
We can hear you.
Maybe some wrong connection with my wire.
Okay.
No, thanks a lot for the question. We engage with utilities companies through Climate Action 100+, as well as through our coal policy, where we expect utilities companies to align with the Paris trajectory. And as Young said, for Asian utilities, we are talking about 23% of global carbon emissions. So there is a lot of work to do in some ways. When looking at the expectations, I think clearly we can see that utilities companies do recognize the issue, do take that into their governance structure more and more. They recognize also the potential physical risk. I think where there is more of a challenge is on the decarbonization path, as well as on coming with kind of public positions, because the challenges that they face, I would name 4. First one is they may have some existing purchasing power agreements, which may be running for a number of years, whereby they would deliver coal-fired power generation, and they also have the amortization of assets. So this is one as a more financial kind of constraint that they have. Linked to that is the national energy policies. In some cases, the utilities companies are actually willing to do more, but they are kind of stopped in some ways because they need also the national commitment to do so. And this links to the third point, which is also stakeholder concerns and expectations. As a utility company, you deliver some basic service to the industry, to the people, and you need to ensure very high reliability of power at a reasonable cost as well. And the issue that Young mentioned about intermittency of power, for instance, for renewables, can be one of the issues that they would be looking at. And definitely if they start to shift and then have some power outage, they will have the government on their back, they will have the people on their back, and everybody will say, what did you do? And this also ties to the fourth point, which is also local constraints in some cases that we can see. For instance, if we look at Hong Kong or even Japan to a certain extent, it's not the best places to have a lot of renewable capacity being installed. If we look at Hong Kong, it's very scarce in terms of available real estate and cost of that. So then you need to find some other solutions like the sun cable project, for instance, which is mentioned in the report to connect solar power from Australia to Singapore can be maybe an example of something that can be done to increase the share of renewables in the total mix for a territory or a country. So these are some of the, let's say, learning points and challenges that we've seen so far. But definitely to conclude, we see also that when countries take commitments, such as the net zero commitment that we have seen with China, with Japan, with South Korea, then it creates a driving force and it really opens the conversation and accelerates. And it's great to hear about the recent target for Korea to increase renewable power generation. And I think as we move to the implementation of these net zero policies, then utilities companies can really see how they should move forward in order to align with these goals.
Great, thanks so much, Paul. Yeah, no, really, really interesting to see how you're seeing this play out in practice at the company level, and how it operates within their markets. I mean, certainly Australia is going through a lot of those growing pains, if you like, at the moment. There's a number of regular examples on a regular basis of those intermittency issues and how that's working as they're trying to establish more renewables into the grid. And you mentioned the new Korea target, and also I'll note that there's also a new target that's been put out there by the Environment Minister in Japan for I think a 44%, moving to 44% renewables target, if I remember correctly. So Seiji, I wanted to come to you on that point and just come back to Japan on that sort of new renewables energy target, but also this year we saw JERA was the first Asian utility to make a net zero pledge. So just interested in your reflections in the Japanese market, and what do you think other utilities in the market will do, following, and especially now that we've also seen this updated commitment put out there from Koizumi-san.
Yes, I think there has been a significant because of the significant changes of the government policy. I think all the utility companies are really struggling hard to make their business plans to adapt to those net zero by 2050. And I also expect that other utility companies, particularly in Japan, will make more announcements in coming months, I think. And so I think there has been a lot of the media reports about TEPCO or other utilities having net zero commitments along with the government policies. And government policies are also supporting that through tax incentives and infrastructure investment through public spending. So I think you need to have those kind of policy harmonization, not only the private sector itself, but also the government's policies supporting those movements is also needed. And I think there's no question about that. So I think we need to have this. I think at least for Japan, there is a more policy harmonization through taxation, through spending, and also the supporting the private sector movements on utilities and all the sectors. So I think those are the things that are actually happening in Japan. I think these things will be kind of model case for the other Asian countries where still, people are still thinking more legacy or traditional ways. So I think these what's happening in Japan or South Korea or China will definitely influence the each country's public policies and harmonizations out there.
Thanks, Kawazoe-san. And I think just we've seen in the last couple of months, the rapid response of announcements on announcements, following through from the government level announcements, and we're certainly seeing that on the corporate level as well. So I think that's we're going to continue to see that. And there's an interesting example in Korea where you know, we're already seeing sort of the policy environment and announcements turning into underpinning policies. You know, the Green New Deal was announced, you know, initially earlier on in the year, and then, you know, only a short few months later, we're already seeing, you know, a Green New Deal fund being established, and then investment houses also, you know, building products off the back of that. So we're starting to see, you know, investors looking to identify the companies that are looking to transition, and how investors are already starting to move capital, you know, to those companies. Obviously, that's sort of more broad than just utilities alone, but I think it's an interesting example to show that, you know, when you do create these enabling policies, how quickly the market responds to that and how quickly it can move. And also companies are showing that they can also move quickly. But to be fair, there's been work that's been going on for a long time, you know, by many of these companies. And I think there's a number of combining forces that are, you know, that are acting as accelerants, you know, at the moment in these last few years, which is obviously what we need to see. I'm just conscious there's a few questions that have been coming in the question and answer box. So a couple of them have been answered just in case, just to allow for a bit more time. But I just wanted to respond to one of them there, about whether AIGCC and the Climate Action 100+ Steering Committee has engaged with regulatory stakeholders this year. So the answer is yes. As part of our engagements and as part of our work as AIGCC, we have been reaching out to regulators in the last, you know, few years and developing relationships with them and understanding their local market environment and how they're looking to continue to transition that. We've seen a lot of work on the TCFD, for example, inclusion of TCFD, increasing TCFD alignment by the regulators in the region, and moving from, you know, voluntary in some cases to comply and explain. And there's also a number of mandatory codes coming in. China was due to have the mandatory environmental disclosure coming in by the end of 2020. And that does include quite a significant amount of TCFD alignment there. In addition to Indonesia, that is starting to have some elements of mandatory disclosure for their environmental from 2020 in a kind of a staged approach. And as part of climate action, as I mentioned before, we have the Asian Advisory Group that identifies sort of the market level strategies and some of the key stakeholders that we need to engage with. Partly, so in some cases, as we've talked about before, with the case of KEPCO, there's, you know, government level ownership of those companies. So that's, you know, one reason to engage with those stakeholders, but also to inform the regulators, you know, where investors, where they're up to in terms of what they're asking of these companies, and so that we can, you know, try and ensure that there's a common conversation that we're all on the same page, and to work with those regulators as well in terms of the increasing global expectations that investors, obviously in Asia, but also global investors, and how and what they're asking specifically of companies. And a report such as this, you know, is something that, you know, we'll also talk with regulators around, so that they understand, you know, at a sector level, how investors are looking to approach this. And I'll just look at the next question that's come up and just see who that might be appropriate to respond to. So in ASEAN, where many utilities are large SOEs, what are investors doing to engage with governments to push for a faster transition? I wonder if one of the panelists would like to take that.
Maybe I can share the
Sure, Sophia, thank you. And then perhaps Paul, come to you.
Yeah.
I think when we say ASEAN, it's so many countries. And when we engage someone, we always think that we are being or investor. It's just dollar sign. It only says that we have some relationship. Then we want them to open doors. So if a country, more electricity company are private, they are just regular corporate engagement. If they are government owned, the influence on government is very important. But everyone has right to learn and to know, to accept, to take action, to commit. And therefore, we care so much about when we deliver some message, educate the trend of the world, show them material. Do they understand? What do they help? We actually even translate document from English into local language for corporate, whatever they want. So with that, they know we come from sincere invitation. So looking at who is the main person or main administration who can move that company, I think it works better. If it's private, it's investor. If it's state-owned, then helping government. So it's something that you cannot rush, but you need to do it with full speed, full heart. And one day they will just surprise you because everyone wants to look good. Every government, every company want to look good as well.
Thanks so much, Sophia. Paul,
Yeah.
you're keen to jump in there.
Yeah, no, sure. I mean, as Sophia said, I think it's kind of an ecosystem as well. It's in some ways we need to push from the government side, like with public policy and all of that. And some of it is about the investor side. And here, I mean, just to talk about AIGCC a little bit, if we see AIGCC today, it's 10 trillion in assets. It's also investors, local investors from 11 markets. And that also gives us a reach because it's always very important to have a mix of local investors, international investors when we reach out to companies to get more efficiency in the way we engage. But definitely like public policy has a role to play. It can sometimes be tricky, but particularly when the regulators are keen to do more, and as Sophia said, more and more regulators are keen to do more, then it can help accelerate action.
Thanks, Paul. And I'll just also add that sort of on a collective basis, AIGCC works with our international investor peers, and we've had a global investor statement to governments that's been sent every year for the past few years, with several hundred signatories signing up from investors, signing up to say, outlining the key actions that they're asking governments to take to get to net zero and elements of the transition that they need to see along the way. So this year, obviously, with the COVID-19 and the global pandemic, that statement shifted to the need for a sustainable recovery, and that had to be considered in the building back better, and to use the pandemic and the stimulus, the green stimulus that was needed for that transition. And thankfully, in Asia, by the end of the year, we've seen some of those really significant commitments from governments in the region, and then and also very significantly, we've seen the US, incoming President Biden also committing to net zero for the US. So we're seeing that happen with significant global market share and share of emissions now covered by those net zero statements. So investors will continue to engage at that global level, but also at AIGCC, we're looking at how we can work with investors quite closely to engage in smaller groups, roundtables and so on, and one-on-one direct engagements with policymakers and regulators to accelerate that transition. So that's something that we have been doing and will continue to do with our members in the region.
Can I jump in? Sorry, can I just jump in?
Please.
And also, I think there is an importance of engagement with the private sector financing companies like financial institutions or banks, because often these projects, overseas projects are being done as a part of the bilateral agreement between countries. So obviously, from diplomatic perspective, it's very hard to say U-turn on those agreements. So. And these agreements often are financed through private sector financing. And one of the good example will be the Vunnan 2 project in Vietnam. And those projects are basically it's a bilateral agreement between countries. So, and I think one of the current engagement activities taking place is through the financing institutions try to, change their minds or changes the investment strategies on those projects. So I think there's financial institutions have a lot to play here, I guess.
Yeah, we totally agree with that, and that's something we're looking to work with investors to help scale up that investor response in the region. I'm conscious that we're at the hour. So I just wanted to say a very big thank you to Sophia, Seiji and Paul for being our panelists here today. Really appreciate your time and your insights and sharing your expertise with us. I'd like to thank the audience for joining today, and please feel free to pass on this recording to colleagues who may be interested in listening to this. And thank you to Yong Langpour and Jane Ho from AIGCC for their fantastic work in getting this this engagement report, utilities report together. But also I wanted to acknowledge the contribution of the AIGCC Engagement and Policy Working Group, who reviewed this document and provided necessary feedback to this, and also additional investors who are engaging utilities in Asia from the Climate Action 100+ initiative. So truly a collaborative effort. So thank you, everybody. And I hope that it's a useful tool in your engagements with utilities going forward. And as we mentioned before, the next phase of this work is to develop an engagement program with 5 companies. So if you'd like any further information about that, or would like to be involved in that process that kicks off in January, please get in touch with us and we'd be happy to follow up with you offline. But please stay safe and healthy this holiday season. Take care of yourselves and your families and colleagues. And we look forward to seeing you again in 2021, hopefully in person at some stage. But thank you so much for joining, and we'll see you in 2021. Thanks, everybody.
Thank you. Bye-bye.
Thank you.
Bye. Bye-bye.
Thanks a lot.